Are you considering investing in Nairobi's real estate scene? Then this video is for you. After spending the past 2 years living and doing business here in Nairobi, I've learned a lot about the city's real estate market that will help you if you're on the lookout for properties in Nairobi. If you're considering investing in Nairobi's real estate scene, let me walk you through some key things you need to know, especially if you're new to Kenya and unfamiliar how the market operates. Welcome to my channel, I'm Marvin and I've been traveling around the African continent since I moved here almost 2 years ago and learned a lot about investment opportunities here on the continent. After doing extensive research and speaking to people in my circle that have done such investments, I will share the most important things you need to be aware of when investing in Kenya's real estate market. But before diving in, let me answer a common question for the diaspora. Can I own land in Kenya as a foreigner? The simple answer is yes, you can own land in your own name as a foreigner. But for now, it's important to know that while buying property alone doesn't automatically grant residency, there are ways for property investors to obtain it. For example, you can apply for an investor's permit if you invest at least $100,000 in a business or property that contributes to the economy. I'll cover topics related to residency more detail in the future episodes. If you're interested in that, subscribe to my channel. Now let's explore the Nairobi real estate market. First off, let me give you an overview of the Nairobi real estate market. Kenya's capital has been rapidly growing at a steady economic growth rate of around 3.5% to 5.5% since 2010. Nairobi has become a major hub for business, technology and startups in East Africa. But it's not just a hub for businesses, but also for institutions like the African Union, the United Nations even has the headquarters in Nairobi, and there are many more international organizations. And this growth has led to booming real estate markets, with demand for both residential and commercial properties on the rise. Factors driving this include increased foreign investment, infrastructure development, and a young growing population that can afford modern living spaces. However, a rapid growth also brings challenges. Nairobi's real estate market offers many opportunities, but it also has risks that investors need to be aware of. Now let's talk about prices and investment opportunities after giving you the brief overview of the market. So the real estate prices in Nairobi vary a lot based on location, property type, and the amenities offered. In high-end areas like Westlands, Lavington, Karen, Gigiri, renting a luxury one-bedroom apartment can start from $700 a month. These areas offer amenities that are basic in Nairobi but considered luxury in Western countries, such as swimming pools, gyms, saunas, 24/7 security. Affordable luxury properties have also become a hot segment, offering quality living spaces at more accessible prices in rapidly developing areas. There, you can rent a one-bedroom apartment starting from around $400 per month. Buying these properties usually costs between $55,000 and $65,000 US, depending on whether you buy off-plan or after completion. It's important to know your investment goals before making the decision. Here are the main 3 strategies that are used in Nairobi. First off is long-term rentals. These provide a steady income with occupancy rates of around 80% in well-located areas for affordable luxury apartments. The second way is short-term rentals via Airbnb or Booking.com. These target tourists and business travelers, offering better returns due to the premium pricing. While the short-term rental business model is way more profitable than long-term rentals, it also requires more effort and comes with higher risks. The third one are off-plan purchases. Investing in properties before or during construction can lead to capital gains of up to 30% by the time of completion. But this comes with risks, which we will discuss later. The next thing I want to talk about is understanding market dynamics and oversupply concerns. While demand is strong due to urbanization and population growth, there are concerns about oversupply in certain segments, particularly in luxury and affordable luxury apartments. In recent years, a construction boom fueled by both local and foreign investors has led to many high-end apartments remaining unoccupied in areas where supply has outpaced the demand. For investors, this means careful market analysis and strategic location selection that are crucial for an investment like this. Focusing on areas with proven demand and limited oversupply can help avoid the risks of long vacancies and lower rental yields. One of the most important aspects when investing in Nairobi's real estate market, especially if you're not familiar with it, is choosing a reputable and reliable developer. And here's why this matters. Quality and timely completion, for instance. The success of your investment heavily depends on the developer's track record. Some projects face delays or often left incomplete, and this can cause financial losses or legal issues for the investor. And here are some tips to help you to choose the right developer. So first off, research their track record. Look into their history. Have they successfully completed projects like the one you're interested in? Developers like Canaan Properties and Val have multiple completed projects and are well known in the market. What you can also do is visit previous projects. So if it's possible for you, visit a project on the ground that they have already completed or just take a virtual tour. So you can just check out the maintenance and the quality of the construction of the building. The next one you should do is check reviews and testimonials. Look for feedback from previous buyers and tenants to understand the developer's reliability. The next thing that matters here in Kenya is verify the legal compliance. Make sure the developer has all the necessary permits and approvals from local authorities. authorities. Due diligence is essential to avoid legal issues, such as disputes over land ownership or construction permits. The next thing are payment terms and security. So be careful with payment structures. Avoid paying 100% upfront, even if discounts are offered. The common practice is to pay up to 30% as a down payment and spread the remaining payments over the construction period to minimize the risk in case of delays or failures. The next thing you can do that would be very helpful, especially if you're not from here, is engage local experts. Hire local real estate lawyers and consultants who understand the Kenyan market and the legal landscape. They can help you with the due diligence and protecting your interests. So now to put it all together, a trustworthy developer not only ensures your investment's quality and completion, but it also enhances the resale value for you. So after discussing all of this, let's come to the opportunities in the Nairobi real estate market. So the Nairobi real estate market offers several opportunities, especially for investors from the diaspora looking to invest in Africa's growing economy. Here are some of the key opportunities. So the first one would be high rental yields. Well-chosen properties, especially in the affordable luxury segment, can yield rental returns of 8 to 10%, and this outperforms many traditional markets. The second one is capital appreciation. Investing off-plan allows investors to benefit from significant capital appreciation, sometimes up to 30% by project completion. The next one is the growing middle class demand. So with Nairobi's expanding middle class, there's a strong demand for quality and affordable housing. Properties that cater to this demographic and offer modern amenities at reasonable prices tend to have high occupancy rates and guarantee stable income. The next one would be tourism and short-term rentals. Nairobi is a regional hub for tourism and business, and this creates a steady demand for short-term rentals and service apartments. High-end properties in strategic locations can capitalize on this, especially when listed on platforms like Airbnb or Booking.com. The next one is modern amenities and lifestyle appeal. New developments often come with desirable amenities such as pools, gyms, and 24-hour security, and this makes them attractive for tenants but also for the personal use. The next thing are flexible payment plans. Developers often offer flexible payment structures, allowing investors to spread payments over the construction period, making it more manageable to invest significant amounts without immediate full capital outlay. Then the last thing I think is very important to know is the economic and political stability of Kenya. Compared to many other African nations, Kenya has enjoyed relative economic and political stability, creating an attractive environment for long-term investments. But of course, no investment comes without risk, and Nairobi's real estate market is no exception. Being aware of the challenges can help you make informed decisions and develop strategies to mitigate potential downsides. Here are some of the key challenges for you to be aware of. The first one would be with the currency volatility. The Kenyan shilling can be volatile against major currencies like the USD. If you purchase property priced in US dollars but receive rental income in Kenyan shillings, fluctuations can impact your returns. The next thing you should be aware of is the oversupply in certain segments. As mentioned earlier, some areas have an oversupply of luxury apartments, leading to longer vacancy periods and pressure on the rental price. The next one is construction and development risks. Delays and project failures can occur, especially with less established developers. This can tie up your capital longer than expected or even result in losses. As suggested earlier, it is important to work with reputable developers and avoid paying the full amount upfront to minimize your risks. The next thing is maintenance and management issues. Even in luxury buildings, maintenance standards can decline rapidly, affecting property values and rental attractiveness. To minimize this risk, hire reliable property management companies and set clear expectations in the contracts. The next potential risk that could occur for you are legal and due diligence challenges. So land ownership disputes and fraudulent practices can pose significant risks. The land registration system, while improving, can still be inconsistent. Conduct due diligence, hire qualified local attorneys, and verify all documentation before purchasing. So while Kenya is generally stable, it's not immune to political unrest or economic shifts, which can impact property values and market dynamics. You should stay informed about the political climate and economic indicators to minimize the risks. Another very important point is the high mortgage rates. Unlike Western markets, mortgage rates in Kenya average around 12 to 15%, making financing very expensive. Plan to make investments in cash and see if the investment is still worthwhile without the use of leverage. I think the last one you need to know is corruption and bureaucracy. So bribery and bureaucracy inefficiencies can complicate transactions and ownership processes. So that's why you should work with trusted local professionals and be prepared for longer processing times. So now it's time to give you my final thoughts and recommendations before investing in Nairobi's real estate market. Nairobi's real estate market can be a great opportunity if you have enough cash to buy properties outright. The market offers substantial returns and the satisfaction of contributing to the growth of one of Africa's most dynamic cities. However, it's essential to approach this market with cautious optimism and thorough preparation. Here are some final recommendations I would give you before you do any moves. So the first one is really research extensively. Understand market trends, economic indicators, and legal requirements before making any commitments. Second thing is plan for cash purchases. Be aware that high mortgage rates make financing very expensive, so it's better to plan for a cash purchase. The third thing is stay informed. Keep up with the current events, policy changes, and market developments that could impact your own investment. You should build a network. Connect with other investors, especially those from the diaspora with experience in Kenya. Learning from other experiences can provide valuable insights and prevent costly mistakes. So the question I have then is, are you already investing in the African market? Share where you started investing in the comments below. So if you enjoyed this video, like, subscribe, and turn on your notifications to not miss out on any other business opportunities on the African continent.